Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, June 30th Technical Analysis Review of the Markets newsletter. As you know, this is a shortened holiday trading week for the U.S. markets. The U.S. market is closed on Friday, of course, for 4th of July, and is only open a half a day through Thursday. A lot of pros are gone. Really, only the hardcore folks are trading. And Steve Nelson, for example, he is up north in Wisconsin visiting his parents. I think they're looking for another home somewhere cooler than Phoenix, Arizona, where they live. It gets very, very hot in there and during the summer months, as you know. But again, shortened holiday week. For YouTube, I'm just doing one video this week, but for our subscribers, I'll be doing newsletters all week, but albeit they'll be brief. And again, guys, if you have other things to do, family, I can, definitely consider doing that because I don't think a lot's going to go on this week. All right. So again, this is a good time to catch up, things around the house, family, friends, stuff like that. Okay. Again, my name is Matthew Frailey. I founded BreakpointTrades.com way back in 2003 to provide advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms. If you're not a subscriber, definitely consider subscribing. We've got a great service, 5 detailed newsletters per week, actionable trade ideas, active community, and our amazing trading systems. Or at least consider signing up to our free newsletter. Okay? Again, I wish everyone a nice 4th of July. So let's go again back to this newsletter at hand. And anyway, so like I said, you can see the newsletter is divided into 8 major sections. We're going to just briefly cover the major indexes. Steve discussed those on the weekend in depth. Look at the KISS systems. They've been on fire, but the market's been on fire. The KISS systems are long only. And this has kind of been a melt-up market. Everything's been going up. It is what it is. We're going to follow the trend as long as possible. And that's the beauty of the KISS systems. They'll keep you with the trend and, for as long as it lasts, but they give you that protection. So after the general market, we'll look at the bond market. We'll look at a few sectors. We'll look at commodities, crude oil, copper, natural gas, uranium, platinum. We'll look at US dollar. We'll look at Bitcoin, cryptocurrencies, mining stocks, precious metals. Platinum and palladium, as you know, have had a phenomenal move. We'll look at also review a few recent trade ideas. So let's go ahead and get started. Item number 2 shows the index sector table, what transpired today. Again, melt up continues. Market index is up another 0.5% or so, 0.5% to 0.6%. I continue to see these analysts out there calling for tops nonstop, and it's amazing. I understand the mental trap they get in, but guys, most of you have probably learned you got to just play the trend, play your system, etc. Those guys are calling tops all the time. I mean, it's very emotional. They don't make any money. They lose subscribers. It's just not worth it. But anyway, major indexes, like I said, up about 0.5% today. I said we're in holiday mode. Major market sectors, most of them were up, albeit, again, fairly small moves for most of these things. Most of them are less than 1% up or down. Currency-wise, now the one thing that can't catch a bid is the dollar. U.S. dollar continues to get smashed down another 0.5%. So while there is some divergence on the daily, there's some longer-term supports. It has yet to find a bottom, so we'll keep an eye on that. Cryptocurrencies, Bitcoin was down a little bit today. It had rallied up to a downtrend channel after an ABC pullback. So a little logical resistance there. I'll show that below. Ethereum was up slightly. A lot of the crypto mining stocks have been doing well. WGMI, etc. Commodities, like I said, the index DBC was basically flat today. Crude oil down 0.25%. Now natural gas is getting taken to the woodshed, down 7.6%. We've been showing that lately. Uranium continues to be on fire, up almost 2% today. Some weakness in the ags. Precious metals had a bounce today. Obviously, that sell-off in the dollar definitely helps keep a little bit under gold. So gold up 1.2%, back to 33.07. Silver up 0.6%. To me, silver has a much different look than gold, and it has potential to move up over time, I think, a little further than gold. Gold's had its big run already, and the miners GDX actually had a good day, up 2.6%. As far as the bond market, we saw a nice pullback today in the 10-year, 30-year Treasury yields, so that helps. Next, item number 3 shows the economic news calendar. Today we had the Chicago PMI, and it came in a bit weaker, but market didn't really care. And we also had JOLTS. And on tomorrow, sorry about that, guys. So tomorrow, July 1st, we have global manufacturing PMI. So we'll see what that looks like. We'll have ISM manufacturing, JOLTS, MBA mortgage, ADP, employment change. And here's the thing. Normally, for the first month, the first Friday of every month, you get the jobs report. But because of 4th of July, which is on Friday, July 4th, the non-farm job payroll report comes out on Thursday, July 3rd. Honestly, guys, my thoughts for the market, obviously we're melting up here. So usually you don't pull back much during the holiday week. I think if we're getting a pullback, it'll likely be next week after the holidays. It doesn't mean we can't get a little, pullback here and there, but ultimately, any bigger pullback I think would be pushed until after the 4th of July. All right, let's go ahead and move on to the chart. So image number 4, here's the SPY S&P 500 high performance KISS system. Actually got a new smart trailing stop today at 593, jumping up there. And this version of the SPY would have went long essentially on that big candle on April 7th, put an initial stop just below the lows there, ratcheted it up over time, and right now it's 593. Hell of a rally from that April 7th lows, as you know. And again, I've been showing this for the last couple weeks. This is my experimental version of the KISS systems. As you know, the KISS systems, what they do is they're long only. They take a long entry based on their proprietary technology. They set an initial stop. They move that stop up over time. They give you that protection. But what this does is it combines a mean reversion trade with the KISS system. So you can see back here all these small little winning trades inside the main long trend. Now at the very end there, you could see in one of the mean reversions would have triggered in February, and that would have been a loser. But the beauty of it with the KISS system, you have that stop. Your stop is the smart trailing stop. And you can see after the system went back long there in early April, you had two mean reversion trades already with inside this longer uptrend. You had the one there in May that closed out nicely. Then you had another one there in June and closed out last week. So this is a pretty cool thing. Someone asked me, well, how could I do this? I mean, it's kind of up to you. One thought would be maybe these are good for option trades, stuff like that, or leveraged ETFs. It's kind of up to you. It's not, and this isn't something I haven't added this to the website and signals yet. I'm still experimenting with it and filters, but it is a neat concept. And I think I explained it last week that one of the guys who works for us, Rick Kwan, who many of you have interacted with through customer service, he actually used to work for John Bollinger Band. Yes, the developer of the Bollinger Bands indicator. And he told me that John Bollinger Band told him, in his opinion, the holy grail was combining trend following with mean reversion. And I'm not saying this is some holy grail, but it is kind of like that, where you have trend following and mean reversion together. Okay, next. Image number 5, again, I showed this last week, but here's, again, a past example of this. So here's SPY, back in the past, and you can see this nice long trade that the KISS system caught. Basically about a 10-month long trade from November until early September there. But within that one main long trade, you had 9 winning trades there, mean reversion trades that all got out, and then you had one final little loser at the end that got out with the KISS system. Okay, so pretty cool concept. Again, I've been showing you guys, but I am excited about it and just kind of interested and excited to see how this fleshes out. And finally, image number 6. So here's the 4 time frames with our custom indicators, and by custom indicators I mean our moving average ribbon, the ATR, the cycles. Again, really not much to say, guys. You can see price has just been following up the ATR all the way up on all the time frames, even the smaller time frames. So that's your support. So market just melting up. Next, back to the standard chart, chart number 7. Here's the weekly S&P. Now, Steve showed this on the weekend, but and I had a professional client I had a consultation with tonight. I consult with a professional client every Monday, so he likes to see some of the bigger picture charts. And ultimately, we're in this wave 5. There's these various possible fib projections over time. I'm not going to get into that here. I mean, it's a holiday week, it's a Monday, but you could see the S&P new all-time highs right now in some sort of wave 5. Next, number 8, here's the standard daily S&P. And if again, as you know, I've been showing this for the last couple months, this nested 1 2 1 2. And that pullback we had in mid-June, we labeled that as a wave 4, and we're now in this wave 5. You can see we broke out to new all-time highs. All right, this area is now potential support on a pullback. And this is also why, divergence is not just a sell signal on its own. You had this MACD divergence and some RSI divergence here. You got a little pullback, right? Yeah, you got a little bitty wave 4 pullback to the 20-day moving average. But if you didn't, if you didn't reverse course, I mean, you've missed the move. Okay. So also one thing, some interesting analysis I looked at it over the weekend from another firm showed that after a breakout to a new high and another push, a lot of times the market historically has about a 5% correction. So maybe sometime after the holidays, maybe we're due for some kind of nice pullback. Again, your first support now would be, the broken horizontal line here right around 61.50. Next, chart number 9, here's the half-day chart. Again, just up, and away. This shows you all these open gaps. You can see you got an open gap down here. If we had a 5% correction here sometime in July, maybe at least this first gap would be a target, maybe even a couple of these others below. But no changes in the trend. Next, number 10, here's the 60-minute view I was showing last week. And I remember my comments, I said, whenever you have a little channel like this, someone called it a wedge, but when the slope is more flattish, more often than not, it breaks to the upside instead of the downside. And that's exactly what happened here. Next, number 11, here's the 60-minute view. Again, remember, a week ago I was talking about this ABC pullback, which that's all it was, ABC pullback, wave 4. And that was another long trigger, and we're just working our way higher. Now, short term, we do have a little RSI divergence, a little MACD divergence. Now, for those wave counters of yours, if you want to break this down a little bit, and I always suggest not to get too bogged down into wave counts, but you can see this breakaway gap here and this uptrend channel. So if you look at this, remember we're in this larger wave 5. So wave 5 right now, I can count 5 waves up. We're in the midst of this little wave 5. So once this ends, then I would be looking for that pullback. Now, this little subwave 5 could still be broken down. I could see a little 1, 2, we're now in a 3. So this could potentially go up higher in a 3, then a little 4, then a 5. That would likely occur for this week, the shortened week, and then we get finally a larger pullback next week after the wave 5. But right now you can see the little breakdown in the structure. Next, moving on to the NASDAQ, chart number 13, here's the triple Qs, high performance KISS system with, of course, the mean reversion component. 2 beautiful trades there recently on those little pullbacks and the uptrend. And the smart trailing stop here is all the way at 526.59, so it's moved up nicely there. Next, chart number 14, here's the standard chart. Again, just like the S&P, broke out to a new all-time high actually last week. And this is now potentially a big support right around the 50.40. Chart number 15, here's the 2-hour view showing that channel. Again, we've just been up in this wide channel. That little consolidation we had, wave 4, got near the uptrend channel line where you found support. Chart number 16, here's the 60-minute view. Again, just like on the S&P, had a nice little channel there, breakout. And we do have a little divergence forming here, just to monitor, but we are uptrending. And chart number 17, here's a 15-minute view. Similar structure to the S&P. And there is a little open gap also. I don't have it marked here, but you can see it from today around 540, just a little over 548-ish. And there you go, guys. All right, moving on. Just a few of the big cap stocks. Here's Nvidia. Remember, we've been showing this for months. This nested 1-2-1-2. We've been calling for new all-time highs, and that has happened. So again, it's been an easy ride on this trend. And guys, again, if you're on the website, the KISS systems, even just the standard KISS systems, have caught a lot of these moves. So let me bring that over to you for example. So here is Nvidia. You put it in here. Trades up 33% on the KISS system. So it went long, it looks like on May 7th. And this is just the standard. The high performance would have went long earlier. So anyway, good job on the KISS systems. Again, they've been catching those trends well. Chart 19 here is Microsoft. Again, it's just melting up, like I said, just following the 9 EMA. And you see the MACD divergence. It's been in there for well over a month. That's why divergence itself is never just a sell signal. But, this KISS systems have also been long that. Chart 20, Meta, remember over a week ago, was showing this is a flag pattern off the 20-day. Well, it broke to the upside and actually briefly took out that February highs. KISS system has been catching that as well. Chart 21, AMD, one of my favorites actually. Been a nice move. Little pullback here today. Little doji we had on Friday. I do like the volume pattern, so any decent corrections on AMD I view as buying opportunities. Moving on to small caps, chart 22, IWM. They've lagged over all the major indexes, but they are working higher. Recaptured this 200-day moving average now. I'm still targeting this potential supply or demand zone, supply zone. Up here above. Had it in place for months now. And chart 23, here's the 2-hour view. Remember the previous week we broke out of that coil. So that does it for the indexes, guys. Let's move on. Chart 24, here's the VIX, slightly up today. Oh, and that's actually a notable thing. The VIX was up 2.5%, while the S&P was up 0.5%. And usually the two move, almost always they move inverse. And a lot of times when they move together, a lot of times maybe the next day you have a little pullback in the market. So we'll see if we have a little pullback tomorrow or not, just since the VIX was up along with the S&P. One thing we want to keep an eye on is this correlation indicator. So typically when this spikes down and the VIX becomes uncorrelated with the S&P short term, this usually occurs near market inflections, sometimes highs, sometimes lows. But it's definitely something to watch. You could see a little dip down because of, again, they both moved together today. Next, chart 25, here's the VVIX VIX ratio. Again, this is a great tool whenever it spikes outside its upper or lower Bollinger Bands for buy and sell signals. Very good indicator. Right now, it's essentially right at the middle of its Bollinger Bands. So, next, moving to the bond market, chart 26, here's the 10-year Treasury yield, working lower, kind of wedging, but down yet again. Chart 27, here's the weekly view. Of course, it's still stuck in this weekly coil. Been working down lower in the coil, but this coil is a good 1.5 years long. Next, chart 28, high yield corporate. The epitome of strength. Look at this. It's accelerating. The market S&P tends to follow this. This tends to lead, and well, this is led all the way up. You've had that divergence building all the way, and again, divergence is never a sell signal on its own. Next, looking at a few sectors, chart 29, XLK technology, up yet again, up 1%. It is getting a little stretched here, a little doji up near the upper Bollinger Band, so just be a little careful there. Again, we have this divergence. Again, the divergence is well over a month, so, but we are getting a bit stretched short term. Chart 30 here is semiconductors. They're also has had a heck of a run. A couple little black candle doji today to be aware of. Here down below is an open gap. Chart 31, XLF financials. Remember I was showing this as a coil pattern over a week ago. Well, broke to the upside, as did banks. Chart 32, transports. They overall been lagging a bit. Now they are above their 200-day moving average, kind of in this little rectangle pattern. Chart 33, home builders. Kind of still in this coil-like pattern. Hasn't gotten going yet. If rates pull back more, maybe that'll help it. And chart 34, energy, still remains weak. Nice sell-off the previous week after the Israeli-Iran war, and it's still above this uptrend line, above the 50-day moving average, but nice pullback in that area. Now, moving to commodities, Jobber 35, DBC, the index. Again, nice correction from that high, obviously induced from that Mideast situation. But again, guys, I've always talked about this. Technically, it was set up. It was very stretched. Look how wide the moving average ribbon was. RSI 14 was way overbought. So it was due for a pullback. Plus, you had these dojis here. So that's why I say a lot of times things set up in the charts, and then you get the news catalyst, and that's what you got here, right? Right now, down here is kind of a big support area. Jobber 36, here's the weekly view, and yet another case of where it sets up in the chart. This was right at the top of the channel at resistance. Well, then you get the Mideast catalyst for it to sell off. But it was at resistance already, wasn't it? So anyway, so back in the channel, basically the middle of the channel. Next, Jobber 37, crude oil. Same thing, big spike down. Now, this is a potential little support area where it's trying to find some support. Jobber 38, UNG natural gas continues to be very weak here. There's a little demand zone here. It bounced off of it last week. It's back into it. The more times this gets tested, the weaker it gets. So if it loses this, this could sell off quite a bit. So it is vulnerable here. Next, Jobber 39, DBA agriculture. It's right around the 200-day moving average. It's kind of chopping around. Kind of has a little short-term bear flag look right now, but we'll see if it can find some support here like it did last time. One area that's been super strong is uranium market. Look at URA. Look at this moonshot up from the April lows. We're simply riding that 9 EMA all the way up. Now you got another resistance here at 39.30. Could get a trade out of that, but honestly, the easiest thing would have been just buying it down here and riding it up. I think the KISS systems are long this. And here's my bigger picture macro view. So you can see again, it's testing that underside of that long-term supply target that I've had for years. I've had this target in place for years, guys. And that's another thing, guys. I'm going to be adding another section of the website called Matt's Macro Plays, where a handful of times a year I give some macro long-term ideas, Next, Jobber 42, CCJ, major uranium stock. This cup and handle continues to play out. Next, Jobber 43, global lithium ETF. Here's another potential macro play I'm interested in, and I have a KISS system for this in the high performance area. I like this really nice long-term downtrend line. I'm along a little bit of this. Again, it hasn't had a clean break of this yet out of this, downtrend, but it does interest me here. It looks like it could be due for a macro trend change. Next, Jobber 44, Bitcoin. As I stated in the early part of the newsletter, after the ABC pullback, it stalled at the upper channel, and you can see it was up here near the resistance of the channel where it's pulling back a little bit. Jobber 45, Bitcoin, and another chart shows you the same resistance. And remember, it also bounced perfectly off that demand zone we had in place. You can also see the little ABC right on the ribbon. Looking at some of the crypto miners, they've had a good time. WGMI had a flag look for it a week ago. Nice pop up late last week, and of course following through today. Jobber 47, Wolf, here's another one. Breaking out here. Broke out last week, a little follow through today. Volume patterns are all good on these suckers. Jobber 48, BBAI, Big Bear. This is another one that I was doing a little fundamental work on that could be quite interesting longer term. Now it's up nicely today. It's had a nice move from that little flag pattern, but one I'm going to keep on my radar. And Jobber 49, Cipher, yet another mining crypto miner, broke last week on nice volume. Look at the volume patterns here. Pretty fantastic looking. All right, moving on, US dollar. So here's the dollar on the daily. Like I said, dollar just continues to go down, down, down seemingly every day. The last major rally stalled right at the declining 50-day moving average. Really needs to reclaim that. Yes, we still have this MACD divergence, but man, they got to turn this puppy around, and haven't been able to do so. Here's the weekly. Remember, the dollar stalled at the supply zone in early January, and it's come all the way down. We're now into the demand zone. Now, this demand zone expands down here to the upper 94 area, so there's definitely room for it to come lower in here if it wants to. And here's that monthly chart of the dollar I've been showing. You do have a potential monthly uptrend line here. Now you could see a slight breach here, but I would really give that weekly demand zone range above as more credence than this trend line. Moving to precious metals, chart 53, gold up 1% today. So remember, I had a nice sell-off for the last week. Here I added a lower trend line if this wanted to form maybe some sort of a symmetrical triangle. It would need to hold this trend line, but you could see how this pattern could develop if it wanted to. If the dollar continues to get taken to the woodshed, that could potentially work out, but just something to watch. Chart 54, here's the tradable ETF GLD. That's the 1X ETF. You could draw the same thing if you wanted to. Again, it's below its 50-day moving average, so ultimately it needs to recover that. Chart 55, here's gold on the weekly. You could see basically bouncing off this parabolic uptrend line and 50-week MA. Again, either we have wave 5 at 3,500, or if we were to make a new high, it shifts over to here. Gold, obviously, as you know, is in a long-term bull market. Next, chart 56, silver, up today, still continues to look decent to me. Much different look than gold. I'm still targeting $50 or higher for silver over time as a macro play. Next, chart 57, platinum. As you know, this is another macro play. I gave this a couple months ago, did a big newsletter on it well over a month ago, as a macro long-term play. So I'm pretty good at picking these out, and this had about a 30% move, 33% move in that time, and that's a hell of a move for a metal. Again, it got very extended last week. You'd see that RSI, you got a double RSI divergence there. So had a pullback, but still holding that 9 EMA. Again, this is a long-term. If you're just a trader, you obviously probably wanted to take profits, but if you're a longer term person, you might want to keep a core, and you add to that core on major ABC corrections. Chart 58, here's the weekly view. Again, just a beautiful moonshot break out of that coil. Very, very extended last week. So, this is soon going to need to consolidate, but this is definitely very healthy. MACD, the volume, etc. And here's the monthly chart. Look at this beautiful textbook coil that it broke out from. Moving average ribbon was all pinched here for the last few years. It's curling up. So this could go a long way over time. And guys, if you want another macro play, here it is. REMX, or at least potentially. This is an ETF. It's rare earth metals. And again, this has been declining here since 2022. But notice it's kind of a wedging here. You got a double MACD divergence. And what I mean by double MACD divergence, you had a MACD divergence here. Back in 2024, it produced a bounce to the 50-week MA. Then another decline, another low that set up a second MACD divergence. And notice the MACD divergence, or this kind of wedge pattern, it's right in line with a weekly demand zone going back to 2020. So again, while it hasn't broken out of this range, this interests me potentially for a macro play. All right, so one to watch. Next, chart 61, GDX, gold miners, bouncing today right off that 50-day moving average. That's your big support here is the 50-day for now. Obviously, a nice pullback the last couple weeks from that divergence and wedge-like pattern, but the 50-day is the first support. And guys, let's move to some recent trade ideas that we've had. So chart 62, DNA was a long idea back here in early June, gave you a pop, and I said emphatically many times in the newsletters, look to buy the dip, look to buy a back test of the coil trend line. And we got that. I took a shot here. And remember, in technical analysis, that's one of your lower risk trades is, not the breakout, but the back test if you get it, because you have a very uber tight stop. Well, today, another nice pop, very nice pop. So good time to take some profits now. It's been an excellent trade. Chart 63, CRML was another one. We had this as a long back here in mid-June out of this coil, gave a great pop, and I said that 9 EMA is going to be your support. So if you bought that dip to the 9 EMA, it's been simply riding it up. Next, driver 64, QTRX. This one's been kind of boring lately, broke out of this pattern. It's been consolidating. I said I still liked it. So it's kind of meandering out of this little coil. But I still own a position. Now, it'd be nice to see some volume come into it and break this up a little bit. Next, driver 65, Oscar. It's been another one. It's been a nice pop. Continues to be strong. Next, driver 66, VSAT, was a long idea from last week. Bull flag pattern that played out. Initial target was this supply zone where it's stalling a little bit at. Jabber 67 TXG was a tight flag pennant from last week that gave you a trade. Little pullback today. It's still okay though. Jabber 68 COHR was an ascending triangle, broke out last week. It still looks okay to me, guys. Jabber 68 Cracker Barrel, long idea. This sucker kind of broke and pulling back. It's just not powering here. Look at the volume. So just keep that in mind. You know, if you want to stay in it or move to something else that's actually moving. All right. Jabber 70 NBIX. This one has not triggered. It's still a valid setup in this coil. It's getting tight. Jabber 71 ONDS. It popped out of this pennant pattern nicely. Jabber 72 CLSK, little pattern I posted on the weekend. A little Pinocchio move above some resistance. And Jabber 73 Cars, here's one from the weekend as well. Hasn't triggered. Nice little base here, resistance around this 12, 20, 25 area. Jabber 74 MLM, Martin Marietta Metals, kind of a wedge type pattern. One to watch here, looks okay. Jabber 75 TOST, looks okay as well as potential long. And finally, Jabber 76 AZ Smart Cart. So again, a lot of us own this here at Breakpoint Trades. I've owned it for a long time. Steve's owned it for years. I've actually owned it for years as well. But you know, the real fun has been since last October. We held a webinar on it back then in the twos. Finally took out this big resistance here in the eights, which became support. Broke out about 2 weeks ago to 11, consolidated, pulled back to this broken trend line where it found support on lighter volume. Again, tentative technical analysis, and today it tested the 11 area again. So this 11 is clearly resistance. Just needs a news catalyst, and I think it could potentially pop again. All right, guys, that'll do it. Again, I hope all of you enjoy your shortened holiday week. Again, get out there and do something. All right, don't just be around the computer and looking at charts. Get out and actually do something. Don't be like me. Anyway, talk to you later. Again, thank you for all your support. And again, if you're on YouTube, please like, subscribe, comment. That really helps us out. I really would like to get the channel to grow a little bit. So please support us if you can. All right, take care.